Hey folks, Dan Frio here with some breaking news on the unemployment rate. It just went down. And you guys always know good news in the economy is usually bad news when it comes to these things over through here. So how bad is it going to be today? Well, that's what we're going to talk about in today's video, folks. So my name is Dan Frio. I'm the host of the Rate Update, and I'm also a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. If you need some help with a mortgage, folks, I'd love to help you out. I'll give you all my information at the end of this video. You're here for these things. So let's get over to this. Here's the breaking news that we have today. U.S. payroll rose by 130,000. Well, we had ADP payroll numbers yesterday, and I'll go over those with you. And it even dropped the unemployment rate down to 4.3. This was 4.6 2 readings ago. So this is fantastic news. But as you guys know, fantastic news in the economy usually is bad news for mortgage rates. We'll get to that in a second. But also, do you know that the government might shut down once again? Yes, it was shut down, I think, last Monday. Let's just pass over to the real economic news for today, and it is right through here. So here's the news that we got this morning. I'm going to go from the top and work my way down. Now, you guys, I need participation today. Give me thumbs up or thumbs down below. Let me know if you think these are good news or bad news, we'll say for the economy. Then we're going to add it up at the end. And remember, the good news for the economy is bad news for the Federal Reserve and interest rates. Well, let's get to it. So the first thing we want to look at is average hourly earnings. Last reading was 3.7. They thought it would go down a little bit to 3.6. It stayed steady at 3.7. So average hourly earnings year over year up 3.7, beats inflation. I'm giving them another thumbs up. Okay, so the next one, average hourly earnings month over month was at 0.1. It was expected to come in at 0.3. It came in up 0.4. On the consumer side, if I'm the wage earner, I'm saying this is great news. If I'm paying that, I'm saying it's bad news. But let's keep going on. Non-farm payroll. Last reading was 48,000. They're saying, okay, can we hit the 50,000 mark? We're going to get a little aggressive. We're going to go to 66. Would it come in at 130,000? Think about it. It's 3 times where we were previously. So is the job market really crashing? Well, you will see one report today, and it's going to come in and say there was adjustments made over the past year. There was about 850,000 jobs lost. They thought it was going to be in the millions. So that's not really going to skew the markets. But let's keep going down. The participation rate was 62 or 62.4, now it's 62.5. Thumbs up. Payroll benchmark, skip through that real quick. Private payroll, 64,000. 172,000. These numbers are crazy, but let's get down to here. The unemployment rate went from 4.4, expected to stay there, down to 4.3. So if you give these all a thumbs up, well, that means bad news for mortgage rates, because here's why. Let's go over to the bond market. I'll show you why. Here's how the day started. This is pretty darn bad. So if you're new to this channel, this is how we follow rates. Okay, you're going to see up at the top there, it says MBS or UMBS. That means it's a mortgage bond. Okay, these are basically conventional loans, 30-year and 15-year, just normal mortgages. You're going to see up through there, it says GNMA. That means it's a government mortgage bond. This is FHA, VA, and USDA. Okay, so they kind of correlate each other, but you see that drop over there from there to there? We were up this morning, up about 10 points. And then all of a sudden we went all the way down to here. There was like a 30-point swing. All you need to understand is this, that number up through there. If the number is going down, okay, that means the bond price is going down. That means yields are going up. Well, this is a mortgage bond, so that means mortgage yields are going up. Okay, so this was down like 20. That means mortgage rates would have really popped up. So the bigger the number, the bigger the adjustment. So today we will see mortgage rates going up just a little bit, maybe not as much as I thought from the opening bell, but that's what we're seeing so far today. So now how's the other markets taking this? So here's what I call a Cinderella story. When we have the Dow Jones, the S&P, and the NASDAQ all up, and we have oil down. But oil's at $65 a barrel. I don't like it. I don't like it at all. We need this at 65 or lower. We'd love this at 60. But with this great news, you're also going to see bond yields going up, and such as mortgage rates going up. So that's what we talked about there. So now on this fantastic news, if you were sitting on the Fed, how many thumbs up or thumbs down would you give it? Okay, so let's get over to see what the Federal Reserve would do. So in 35 days, the Federal Reserve is going to come out. Now, this number recently was about 85, 90%. What's the odds the Federal Reserve is going to cut rates now? 78% chance they're not going to cut rates. Okay, so what this means is right through here, up through there, that's the federal funds rate, 3.5 to 3.75. Right below it, 78% means there's a 78% chance the Fed's not going to cut rates at this meeting. They're not going to cut rates at the next meeting after that. There's almost a 60% chance. And then from there, there's a whole new cast of characters at the Fed. So we'll worry about June and July at that point. So what would I do? What would I do if I'm a realtor, loan officer, homeowner, home buyer? What would I do if I'm sitting in your position right now? Well, if I'm a homeowner, I would look to refinance, especially if my rate is over 7%. So if you know somebody, brother, sister, aunt, uncle, saying, hey, what's your rate? Most people don't even look at this. You might be able to save them thousands. Okay, so if you're at a rate 7 or higher, I'd look to see if you can refinance and lock in now and save some money, because mortgage rates, like I said, they're going to be in a range. The range I'm expecting them to be in this year is 6.25%. Down to 5.875. Now, we'll get to 5.875. We'll get there gradually as the inflation starts to teeter. But right now, we're gonna teeter on that high end. And today, we might even be close to 6.2 based on this run on the good news on the economy. So if I'm at a rate at 7% or higher, I'm locking in right now. My break-even point's good. But wonder if I'm looking to buy. Well, let's go over to that. If you're looking to buy, maybe in the spring or in the fall, should you be freaking out saying, okay, if this good news continues, could the Fed raise rates? The Fed's not going to raise rates. So I don't think rates are really going to do anything. Like I said, I think we're at the high end right now. Could they go a little bit higher today? Yeah. But the trend is going to be going down, but just a little bit. So I don't think you're going to be freaked out. But if you're sitting on the sidelines waiting for 5.5%, 5% to come back, you're going to be sitting there a long time. So if you're a homeowner right now, plug in your information right into this tool we have. It's called Rate Watch 2.1. What I want you to do is what interest rate would you look to refinance, or at least kick the tires? Or how much of a monthly savings would you want? If you say, okay, Dan, if I can save $300 a month, call me, text me, let me know. Well, that's what we're going to do. We don't sell the data. We just put it in there. But if you're looking to build or buy, I don't think rates are really going to do much or anything, but just make sure you're putting yourself in a good position. Again, my name is Dan Frio. I'm the host of the Rate Update. I'm also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. The coolest thing is this. I work at a bank. That bank has blessed me with all these licenses, but they came and said, what do you need? What do we need to do to be more helpful for our clients? I'm like, we need products and rates. That's what everybody's looking for. If we have those, what else do you need? And because we have the experience, I've been doing this for over 35 years. So what they did is they went out there. Now we're set up with almost 40 lenders. These are banks, credit unions, other mortgage lenders you don't even have the access to because you have to go through a company like myself. So reach out to us. Let us help you out and navigate this. I've been doing it for over 35 years. We got over 7,000 videos in our arsenal over there. So check out our system. But I don't really think mortgage rates are going to move from here. So if you're buying down the road, you'll be in a good shape. And if you're looking to refinance, I think you should look at the numbers today, because I don't really think mortgage rates are going to go much lower than where they are today. So that is my report today. And if you want to kind of figure out how do you do what you do, Dan, that 30 thing, well, join me today at 1:30 today, right up through there. I'll hope to have the link up there. I'll be doing a live event to show you how behind the scenes we show people what kind of rate do you qualify for and what kind of program, because even the program matters to you. And we're going to show you every opportunity or every program you qualify for, the whys, and what rate you would actually qualify for as well. So that is the report for this morning, folks. I will be live later this afternoon with that event. But otherwise, if you need some assistance with this, please join us and make sure you subscribe over there. So every morning that I come out and post a video, you get an alert. So thanks for subscribing, and thanks now for maybe understanding a little bit more about what's going to go on with those today and the whys behind it. Thanks for watching, folks. I'll see you tomorrow. Bye-bye.